Is retail concepts, price action strategies better than ICT concepts? That's exactly what I'm going to be breaking down in this video because myself, I do trade ICT concept. This is going to be a bit of a different video because usually I give you guys technical videos. Now, while this is going to be a bit technical, it is not only going to be technical. I'm going to be explaining why I chose to trade ICT concepts over, for example, supply and demand and support and resistance. Now, bear in mind, I am not an ICT stan. I understand that any concept, any trading concept can work, and there are millions of people being profitable with the simplest strategies such as support and resistance. Please keep that in mind. I am not a person who thinks ICT is the only way to be successful in the trading industry. As a matter of fact, I would go as far as saying as there are more retail profitable traders than there are SMC/ICT profitable traders. Now, I have traded both. I have traded price action strategies like supply and demand and support and resistance, and have also traded ICT concepts for a very long time. So this right here would, in the eyes of a retail trader, be a perfect example of a good level of resistance. Now, my problem when I used to trade retail concepts was that I never knew where price actually wanted to reverse off of. Now, when I discovered ICT or ICT concepts, that is exactly when this clicked for me. Now, the only reason why I chose to trade ICT over retail, price action, whatever you want to call it, is simply because of the precision. I know exactly where price is going to reverse. Now, does it work 100% of the time? Absolutely not, right? Nothing does. But it will tell me where price is likely going to reverse off of and not just a zone. And that way I can get my entries way more precise. And we're going to look at this example. So zooming in here, we can see that we have 1, 2, 3, and 4 retest of this resistance zone. Now, this was previously used as support. Now we traded through it and used this zone as resistance. Now, this would have worked if you had shorted here or here, but let's say I want to short the next time price comes up into this zone. Now, where am I going to short, right? Because looking at it, there's also a level of resistance right here, right? That price now traded through. Then there's another level of resistance right here that price is currently in. And then there is one more level of resistance up here. Right. So how do I know from a retail point of view whether price wants to reverse here, here, or here? Well, I don't, right? That is why I chose to trade ICT over retail, because when I trade ICT and when I've watched so much of this guy's content, I know that equal highs is something that the market will often come back to. And so because we have equal highs here and we take the concept of liquidity into the equation, we know that there is a bunch of stop losses resting above here, which is exactly why I don't think price will reverse off of this level. And I don't think price will reverse off of this level. I do think that we need to come up into this level of resistance before price reverses. Now, where in this level would I think that price wants to reverse? Well, when you look at it from a liquidity point of view, these highs need to get taken, ran, whatever you want to call it, which basically means that price comes up, wakes above these highs, stops out all the stop losses that are resting above here, and then dumps. So because I trade ICT, my trade might look something like this, and then go for a 1 to 2 risk to reward right there, and let's play it out. And as you can see, because I knew that these equal highs were likely going to get hit, and if any of these 3 zones that I mentioned were going to act as resistance, it was probably going to be these equal highs, because I know through experience that the market will almost always come back to equal highs. So because I trade ICT concepts and I know the concept of liquidity in highs and lows, equal highs, I knew that these highs were likely going to be the place where price wanted to reverse rather than this level of resistance or this level of resistance. Now we're going to use that exact same analogy for this supply and demand example. This right here is what we would classify as a level of supply, right? We have a green candle right here, right before a huge sell-off. This right here is what most supply and demand traders would consider a supply zone. Now, how do I know that this level of supply is going to hold and send price lower? I know that it's not going to hold when we have equal highs right above. Because again, just like in the last example, equal highs is something that the market will often come back to, if not 100% of the time. And that is exactly why I know from an ICT point of view that this level of supply is not going to hold. Now, does that mean that the supply and demand strategy does not work? Absolutely not. It's one of the oldest strategies in the book, and I am 100% sure that a lot of people can make it work. The ICT concepts just made a lot more sense to me because now I was able to tell apart and pick apart the good supply and demand zones from the bad ones. And the same goes for support and resistance, trend line breaks, whatever it might be. So let's see what happens here. Ideally, from a supply and demand strategy point of view, this green candle should send price lower. Now let's see what price does. And as you can see, price just comes up way too high, right? And if you had taken this level and shorted off of this supply level, you would have probably been stopped out, right? But I did not take this supply zone because I knew that we had equal highs resting right above this supply level, and that price is likely going to return to those equal highs. Now, back in the day when I traded supply and demand, I very well might have taken this, supply zone because of the huge sell-off that it gave off right before this green candle. So ideally, it should hold. But because of the equal highs that we have right above, I'm not expecting this to hold. Now, had the chart look like this and the wick right here took out this wick, then we no longer had equal highs, and I could therefore safely assume that this level of supply was going to hold. The same thing goes for this level of resistance right here. Right, we had a level of support that we traded through, and it can now be expected to act as resistance. Now, why did this level of resistance not hold? As you can see, we traded through it. Well, it did not work because we had equal highs resting above. Now, please, again, keep in mind, I'm not bashing anyone's strategy. I know that anything can work. I'm simply giving you my point of view and why I chose to switch from support and resistance, supply and demand to ICT concepts. Now, here's another great example of something that used to stop me out a lot when I was trading retail concepts. You see, one of the concepts that I used to trade a lot was consolidation breakouts, right? I would often find myself getting stopped out. And once I started studying ICT and discovered his concepts, I quickly found out why my consolidation breakouts were no longer working. And this right here is a great example. So what I used to do back in the day was to wait for a candle closure above a consolidation like we have right here, and then I would long that breakout. Now, when we have a candle closure like this with so much volume behind it, back in the day, I would long this, right? This would be a long signal for me because this told me that price was now ready to break out of the consolidation and expand higher. But what I failed to understand was that this was a trap, right? This is what we call a power of three. This was a concept popularized by the good old trader Larry Williams, who actually holds the record for the Robbins Cup at 11,000 something percent. And what he was doing was trading these manipulation moves of the consolidations, right? So we have a consolidation here. We have a candle that goes above the consolidation, right? A lot of people think this is a breakout, and I used to as well. But look what happens now. Price ends up dumping, right? And I discovered with ICT that this was what we call a manipulation move, right? Because it looks like that price is ready to break out of a consolidation, and it looks like price wants to go higher. But in reality, this was just a fake out, and then it dropped lower. And that is often what you will get with consolidation breakouts. And so once I discovered and started studying ICT, I no longer longed these breakouts, but I instead shorted them. And this was just 3 examples of the many examples of why I chose to trade ICT concepts over retail concepts. Now, I'm not telling you that retail concepts does not work, because I know plenty of people who are really successful with supply and demand and support and resistance. If you're watching this video and you're trading either of those two, it does not matter. Okay, I'm not here to try to convince you. I'm simply here to explain why I switched from those strategies to ICT. And the reason for that is because it made a lot of sense for me, and it allowed me to trade with precision. So by trading ICT, my trading became way more precise. And that is exactly why I chose to trade ICT over support and resistance, supply and demand. I understand why a lot of people might look at ICT as this cult thing, and I totally agree. And that is simply because the barrier to entry of trading is extremely low. So you will get a lot of 13, 14-year-old kids, and they typically will watch ICT. But I understand why some people may look at this as sort of a cult. Now, I'm telling you that ICT can be very profitable, and it can also be very unprofitable. Just like support and resistance can be profitable and very unprofitable. But again, this was just a video explaining why I chose to, go down the path of ICT over trading support and resistance, supply and demand, whatever it might be. Now, does that mean I completely disregard that retail trading exists? No, not at all. I will actually often use retail trading as confluence to my entries. So if I enter off of a fair gap and I see that it just so happens to be a resistance level or a support level, well, that simply adds to my confidence. So I hope you enjoyed this sort of different video, and this was really just my take on ICT versus price action / retail trading. I'm not here to convince anyone. I'm simply here to give my explanation as to why I trade ICT over retail concept. So thank you all for watching, and I will see you in the next video.